Morning, everybody.
Yeah, good morning.
Okay, so today I just want to make things clear and easy for you, just to make it as transparent as possible. So, people who got the system, I think you have all the tools which are saying here, all the indicators which are here,
Yeah.
you already have them. The circles, you have the circles which show you the highest. Okay, in fact, let me just break down everything for you guys so that you understand. So, these circles, they give you an insight of the highest point and the lowest point. And through that, you're able to use a Fibonacci to point out your lowest and highest point in the market. It's very useful. So as you can see on my chart here, I've boom 1000. So I've put a Fibonacci and you can see there's an entry for a sale at this point here. But if you check, it's exactly, this is a daily candlestick here. I mean, daily time frame. You can see the sale was taken within the candlestick, the one which has the signal for a sale. Then it has been going all the way down. Then there are these levels on the Fibonacci. I'm going to explain these levels. I noted them down in my book so that at least I can use them anytime. So this level mostly is where we take our take profit. And this level here is where we take our first TP. This is where we take our second TP. Reason being is this is where the market ranges. It ranges, it can make a reversal back to the swing high or to the highest point of the market, or let's say the resistance point. It will turn back from this point once it reaches this point. Or sometimes it will range and break, because this is where most of the people, if you check about the Fibonacci, that's where they take the sell points, because it's a breakout zone. So okay, it's a zone where the market might do a retracement or it does a breakout. So once it goes below that level, you see that that's where most people start doing their sales just from that point. And if you take a closer look, if you take a closer look, if you look at our main moving average, okay, let me just move this a bit out of the way. The Fibonacci, let me move it a bit out of the way. Let me just do it somewhere like that so that I can zoom in. You see, if you check the main moving average at this point here, it's where it even turned from blue to red. So it's showing that now the market is in a strong bearish move, as you can see here. So this is where most of the magic happens. Need to pay attention to that. So before I even go further to explain most of all these, first I started with the circles. These show you the highest points. I'm not really sure if on a mobile you can use fractals to get the same results as these circles here. But yeah, that's how it is. So let me just put the Fibonacci exactly. I mean, yeah, the Fibonacci exactly where it's supposed to be, the highest point of the market here. So now you can see I've added these two custom levels. These are entries. There's entry one and entry two. So entry two collides mostly with where you get the signals. You see? So exactly where the signal is, entry two, it's where exactly my sale is. So how do I plot the Fibonacci? I'm sure you asking how can I use the Fibonacci? And today's Zoom session, let me just break it down to what we're going to look at today. That was just a short intro of some of the things. But today, what we're going to look at, most people want to look at entry, and exit points. What to buy and where to exit the market, or where to sell, or where to take profit. Or if there's anything, you can just add up so that when I start explaining, I know exactly the guidelines to follow. So, what are the challenges you've been having when it comes to trading overall? Maybe you can tell me a few things, what you don't know, what you miss out on, so that at least there you can learn something today.
For me, it's mostly the time frame trading, how to swing basically.
Oh, how to swing. Okay, good. So how to swing. So
Yeah.
it's to be covered up in the entry and exit. Well, what other thing?
Mhm. I think for the 1 minute scalping, I think I kind of understand it. Yeah.
Okay. Okay, also cover up to
And
1 minute.
also how to catch spike.
Okay, how to catch spikes. So it will be
Yeah.
spikes. So it will be spikes, so
And
which means,
also
mm,
let's say for boom 1,000 now, like this market now as it's trending upwards, if it's safe to trade the candles.
okay, we'll get to that because every
Okay.
the market moves in zones. That's one thing you need to understand. Okay, so talking about it. So we talked about spikes and how to swing. So entry swing. So so these things are just one and the same thing. So about entry, what to take your perfect entries. So if you understand what to
Yeah.
take your entry, which means you're going to safeguard your account, whatever is going to happen in the market, there's always sometimes small retracements before the market goes to where it's supposed to go. So you need to understand risk management. So risk management goes together with entry. You can take entries at the right point, but if you're using improper load sizes according to your account balance, you might end up blowing your account. Then afterwards, the market will go your direction. Then you say, no, maybe it was manipulation and all that. No, you need to understand first the risk management. You need to understand what load size is suitable for each balance of the account. So, so now if you look at market data point right there, you just don't jump into the market. You see, if you look closely, if you look closely, let me see if I can use alternation. Okay, yeah. So if you look closely, we have this point here. There was a sale at this point. But the market only sold two candles. Then afterwards push price all the way up. So with if you understand price action, and you need to understand price action, and you need to understand one thing, one rule about the market. There's no market which just goes up and down. Like it just goes up, then instantly goes down. No, that's not how the market works. So the market, if it's moving all the way up, if it has been going all the way up, up, it's making high highs, high highs, high highs. So it won't just from the high highs, it won't just start making lower lows, lower lows. No, it has to make some sort of range. Sometimes the range is going to be equal, or it's going to form some sort of a flag. This is why you need to understand the flags. You need to understand consolidation. So when the market is in a consolidation phase, that's where sellers and buyers, like okay, we'll just say the market maker. That's why now they're going to make a decision to say, has the market reached its highest high? Can we now start selling? Or how can I put this to make it easy? Because if I start using those other terms, it's going to be hard for people. So let me just try it. Let me just try to make it as simple as possible. So when the market is moving high like that, there'll be a point where now buyers and sellers are going to fight. Or let's say those people are buying, they're now going to start selling off their shares, or they'll close their buys. Then now the sellers are going to take over. So now there will be that point where all those transactions are going to be happening. That's where now you see the range. So this is now where you see this phase, or this range, which was happening at this point here. You see that the market will be making, there's this point here. There's a support point here, and there's going to be a resistance point there. You see, it's more like in a cage. So it will be hitting that point, hitting that point, hitting that point, hitting that point until a breakout. So after a breakout has happened, now this is where now you see the market pushing price going down like that. You see? So now for in order for you when you understand that, when you just look at the graph, you understand market structure. You look at the graph, you'll be like, oh, okay. So the market was ranging. So what's the next move? So now the system is one which is now going to show you that, oh, now we have red bars and we have a signal. Which means at any given point, the market is going to do what? It's going to start selling. So you just don't jump into a sale anyhow. What do? You can use the Fibonacci to show you the levels. You look at the lowest point, the lowest point which was this one, the previous low. Then you look at the current high. You see, oh, you draw a Fibonacci. Then you look, oh, okay, now there's an entry there. But not only that, let me just get rid of the Fibonacci. Not only that, the best thing you can do is you get your what? Your trend line. Trend line is always important. You look at you touch the lowest point of the markets. Okay, so here. Remember what I talked about? Remember what I said about level 23 on the Fibonacci? This is where most of the people are going to do what? Are going to start selling
Selling.
from. Yes, because this is where the market has done what? Has done a breakout. And if you look at main moving average, this is where it has tended to trade. So people will take advantage of this move and start selling from that point. So, but for us, the good part is there's where you can join a trend line just within this market. So I would say on the maybe okay, no, not maybe. Let's say in the 1 hour time frame. If you look at the 1 hour time frame, we move it here. Let me do this in the 1 hour time frame. You look at this point here, it will touch this point. So let me just draw my trend line touching those points. Yeah. So you see, so from this low point here, so from this point here, going to this point here, you connect these two. Then you see, oh, the market has done a breakout at that point. And if you go back to the daily, you see this trend line which I drew in the 1 hour is the one which collides with the signal which you are going to see here. Is it? In the 1 hour, there's a point here, and there's another point here. So it has touched 2 points. A low point here, another point here, just after it broke structure here. So it was making highs, and now it started making consolidation. So after consolidation, it made the lower point here. So if there was another point here, if the market pushed price up, so we would have expected the market to start pushing price later on down on the other side. But since this one broke down here, then you go to the higher time frame. Let's look at what happened in the 4 hours. So in the 4 hours, we already had the signal to say the market is selling. So if you jumped into the daily, then you look at the daily, you see, oh, okay, so everything is colliding, everything is showing that the market is going to go down. So you take a sell, exactly like what I did here. You see, I took a sell at this point. I'm not just talking from without. Everything is as you can see, is there. So and this is one secret I'm going to tell you. When you see the first one here, it's the reason why we even had to create this one here. If you go to my previous videos back in 2021, 3 years ago, you'll see that I was explaining before. I was explaining on the main chart here. I was explaining on the chart which is here. Let me just move this down. I was explaining on this chart here on the mobile strategy. You see that when this moving average crosses with the other moving average, goes to the other side, you have to wait for the second cross, which was going to be this one, before taking any sale going down with the market. If you want to swing, so this is exact thing which was happening. The market had to come back, make a double top, then start pushing price downwards. You see? Then now you see now the move going down like that, as you can see. So the good part about all this, if you follow the system, then if you do your analysis using the lower time frames and going to the higher time frames, next time you won't even have to do all that. You just look at the structure of the market, then you already know what's happening. Then you just follow what the system is telling you. And the one day it's telling you to sell, you sell. The one day it's telling you to buy, you buy. It's the same reason why I took a buy from this point, going all the way up, waiting for the market to reach the highest point before exiting that buy and taking a sell and going all the way down with it. You see, this is how people trade smartly. They look at the higher time frames, they follow the trend of the market, and it makes things easy. As long as the market hasn't broken down the trend line, it's still an uptrend. It's following the channel. So you have to follow the tide of the market also. If you go against the tide of the market, this is where you end up now blowing your account. And it's not a good thing. So what we have explained on the higher time frames, we have explained on how you can catch a swing, how the system makes it easy for you to enter a trade with confidence and hold for some time. So now the way the market is like this, let me now look at risk management. So in order for you to sell using 0.50, what do you need to look at? So I'll go to my modify. I clicked on the entry there. I'm just trying to show you how much risk you're putting on your account in order to catch that move and how much profit you're making off the same trade. So you take your stop loss up. Let me just put a 20 here. So stop loss is going to be up. Then your take profit is going to be down. So we're just going to put zeros here. Yeah, somewhere. No. What's the current move? 210. So it's 18 to 10. So 18 to, we'll put to 20. Okay, let me see. 18 to 10. Okay, somewhere here. What am I missing? Let me see. It's making it. What? Yeah. Cancel. Let me just modify here. So take profit will be down. Oh. I get. Oh yeah, exactly here. Then on top here now. So stop. Oh, so stop is on. Okay. Okay, so 19. 19.8. Okay, even here, it's fine. Yeah. Okay, so let me just move this. Uh-huh. Okay. So here's how you're going to do your calculations. How you're going to do your risk calculations. So you look at where the signal has been given to you. So before you take a sell, what you can do, you can also put a sell limit. Or the moment you take a sell, you get okay, just to calculate. You put a sell limit, then you do what I just did. You modify the entry. So you take your sell stop, you put it at the highest point of the market, just in case the market was to reverse. How much? Looking at 300. You see? Then so let's look at take profit, just in case the market swings to back to this point, back to this support point. How much is that? We're looking at 2,000. So in order to safeguard your account, in order to safeguard your account with this lot size 0.50, you look at this point here, be like, oh, so if the market was to go against me, I'm going to lose about 300 US dollars. Then if it goes accordingly, I'm going to safeguard how much? 2,200 US dollars or even more, according to where the lowest point of the market is. So you look at that, you'll be like, okay, so this trade, I'm going to risk, I'm putting 500 US dollars. Then I'm going to make a 2K, 2,000 US dollars out of it. You see, if you are going to swing and hold it for maybe 2 weeks, so depends with how the momentum of the market is going to be in that particular space of time. So you look at that to be like, okay, so I have 500 US dollars, so I'm going to use lot size 0.50. Then I'm going to swing the trade for some time. So yeah, so that's it. So from that point going all the way down, remember, higher time frames, on higher time frames, the market takes longer to go to your preferred destination. So the same lot size we're using here. If we're scalping, we're going to scalp and make little amounts, but if you accumulate those amounts, we can even achieve the same results in a short space of time that need to take for you to hold and swing one trade like this. So the risks are different according to what you are going for in the market. The risks are different. So yeah, when it comes to swinging, this is what you need to consider. You put in a certain amount, then you'll be like, okay, this is the amount which I'm willing to risk, and that's how the market goes. So the best part is, yes, you take a trade, you'll be like, okay, 500. So the moment the market reaches somewhere at this point here, you've seen the breakout. The best part about all this, you can move the sell stop and put it in your profit margin. So that's like $200 done, made. Then at this current trade, we're sitting at how much? $600, you see? So if you have $500, which means I've made 100% of your account already, you've already made 100% of your account. So the current trade here shows 600 and 600 something. So you can move from negative to positive. So which means you've locked your account. So if the market was to reverse back at this particular point, you're not going to lose anything. Actually, you're going to close in your desired sell stop amount. So in this case here, which means $362, that's the amount which you're going to that's the amount which you're going to that's the amount which you're going to make if the market was to go against you. You see? Yeah. So yeah, so that's it for swing trading on a hard time frame like that. You see? So in my case right now, I can hold because I'm okay with this trade. So I'll leave my sell stop at that point because the market has already broken that level. It is still going down. As I can see there. As I can see there. As I can see there that the market is going to go down. And on the weekly time frame, we have a very nice candlestick, the previous candle, which had the star on top there. And push price nicely down like that. So at this point, yes, it's consolidation point because we have a resistance point here. So this is why now you see the candle trying to range before it makes a decision to go down or come back with a retracement and continue going down, or to continue going down. Because if we look at the higher time frames, the market is still in an uptrend channel. So it's still bullish, as you can see there. Then the best part about moving averages, I don't know if someone has already noticed these moving averages. I think for those who got the system, I'm supposed to ask you some questions, what you understand on all these moving averages. So if you see closely here, the red MA, the moment you just touch the bottom of the candlestick, you see what happened? The market started pushing price up. And this mostly happens on all time frames. It happens on all time frames. This indicates the exit. We call it the exit moving average, the red one. This is why we put it red. And for those who don't know about the color coding of all these, we actually use the traffic lights to make things easy for everyone. We use the traffic lights. So you know how it is amber, but here it's gold. You're waiting, or you are there, like you take you take a trade. Let's look at it in 1 minute like this. Here, there was another moving average which was green, but since the bars are already green, we decided not to put it there. So we just left these two. These two. In fact, there are three. There are two other moving averages which you can't see. If we do this, if we look at indicator list here, if we look at the indicator list here, if we go here, you're going to see 1, 2, 3, 4 moving averages. But on the screen here, you're only going to see how many? 2 moving averages. Not to distract you on the charts. We just wanted to make the chart as clean as possible, not to distract people. So this is what we're talking about. Within this space, We're now back in the 1 minute now. The entry is in 1 minute for those who prefer to scalp. Yeah. So within this space here, this space here, even here, within this space here, these are safe points if you're scalping. These are safe points if you're scalping. Scalping is a different game also. These are safe points if you're scalping. The reason why I'm saying that, if you took a trade at this point here, maybe that's clear so that get to see what I mean here. Cancel. So what I mean is, all these points which are safe, like all these points here, the market will spike, it will cover the red bars. Later on, it will come back to your entry point if you took a trade at that point. Same thing which happened here. So this market has to come back to cover up this point. You see? But put in mind, I always talk about the moving average, the main moving average. When it's under the candles, when it's blue, just know that whatever is going to happen, the market is pushing price up. So if you look at the structure here, the ticks are not more than the spikes. The spikes are more than the ticks. You see, spikes, yes, the ticks are going to move like that, but the spikes are going to be higher than they're going to reach higher points than the ticks. You see? So if this is under the candles, just know whatever you're going to do, when the scalp is done, when the bars turn from gold to red, any point you buy, I'll guarantee you, any point you buy, especially when the market is coming from a support point, any point you buy in the red zone here, you catch the spikes. You see, it will cover up the spikes. So this happens in all the time frames. And what do I mean by all the time frames? If you look at the 5 minutes here, sometimes I just look at the 5 minutes, I'm like, oh, okay, now I see where the market is going to go. So we had a nice trend from this point here. The main moving average was on top. The signal was given there. The market was pushing price nicely down, you see, especially when the moving average is up. This is where you get nice moves. Nice selling moves. If you are one who wants to go with the trend and just want to trade the ticks and you're scared to catch the spikes, then you're very used to trading the trends. This is the perfect point for you. You see, whatever is going to happen, look at the spikes. The spikes are just small spikes. It was just trying to break the support here. After breaking the support here, it just pushed price going all the way down nicely. You see, the spikes were small. So if you took a trade from these points, yeah, you are very safe. You don't even have to. Oh, what's going on? We're running out of time. Oh, we're running out of time. Okay. We only have 9 minutes. Okay, let me just make it quick. Okay. So at this point, you see, went all the way nicely down. So you don't even have to worry. Then at this point here, you see, same thing. Push price up. Look at the first spike. Here, look at the first spike. Even at this point here, the spike came, but look at this. It came back to do it, to cover up those points. You see? So before your account gets missed, it comes back at least. That doesn't do damage to your account. Same thing which happened at that point. But after this, look at what happened. The market's pushed price all the way up. So in the actual sense, when you see this, you don't even panic. You just start closing your negative positions. Once they come back to your entry points, you close. Don't hold such with such, because sometimes the market can go all the way up. So at this point, look, same thing. Then at this point, the market is pushing price up. So I think I was talking about covering up the red bars. Look at this. Same thing where you take nice sell trades. Same thing where the spike is going to cover up the red bars. You see? So I'm just giving you insights. Since you already have the system, do your back test, go through everything I've talked about today. Just look at the structure of the market. Look at the behavior of all these patterns. Once you look at all those things, you're going to start understanding little by little how the market behaves. Then there are also other videos. I think some videos are locked. I'm going to unlock them so that you can have access to them. Or I'll just send you the copy of the video so that you check. So remember, we came to these lower time frames to look at what? the moving averages. There's the red one and the good one and the red one. So the red one, the moment it touches the candles, there are two things which are going to happen. See that uh it's going to give a signal to sell and come back to this point where the signal to sell is given. Oh, it will spike. Then later on, it will come back to these points later on. So this is why you have to be careful. You have to take trades accordingly. Accordingly. Yeah. So you follow the golden moving average, you take profit at the red one. So yeah, it was all clear. If you stayed longer in the market, if you are scalping, if you stayed longer, yes, the spike would have caught you. But if you are very smart and you understand that, oh, since the bars are red and the moving average is a blue here, so which means the spike will come. Then you're going to take advantage of the spike which is going to come at this point here. And boom, you start doing the same things over and over again, then you start getting used. So this is how it is. When you repeat the things over and over again, you get to understand them, and it's going to be very easy for you to take advantage of that. You see, 1 minute, same thing happens. Boom, covers up, but you have all these. Look, so let's say you are trading the market. Not 50, not 50, not 50. Delete. 50 is way too much. Let's say you have $500, yeah? Oh, okay, let's okay, 500 US dollars. Yeah, you can use 5 lot size when you're scalping. But let's look at smaller accounts. Let's say you have 50 US dollars. Then you want to be scalping. You use lot size 0.50. Boom. You jump in here. Then after you jump in here, you take profit just below here.
Just below here.
Which is going to be exactly at this point here, which is $3. You see? So which means here you've made $3. Then you jump in again here. You've made another $3, very safe. If you want, you can also do, because the market is ranging. If you want, you can also catch the spikes. But I don't know how many people. But anyways, as time goes by, you'll be able to do that. Then again here, you make $3. That's $9 already. Then you jump in again here. You make another $3. That's $12. So you see, from $50, you're going to have $62. Within how many minutes? Just within, let's say, an hour, you've already made $12. You see? So you've moved your account. If you continue doing the same thing, you can catch here, you can catch here, you can catch here, you can catch here, you can catch here. Then here you can also swing according if you're looking at the high time frames. But if you're just following this, you can catch here, you can catch here, you can catch here, $3. All these you can be making $3, $3. The moment the account reaches $100, you start entering two positions. So which means it will be double now. You'll be making $6 each entry. $6 each entry. So instead of you now making those $3, you start making $6 each entry. $6 each entry. Then as the time goes by, you increase your lot size. As long as the account is growing, it's growing, and you start compounding, and just increasing the lot size, doing the same thing, repeating the same thing, and compounding. And this is the same strategy which helped me scale up very fast. It took me a month to move from $60 to 3K, $3,000. Then the moment I reached 1,500 US dollars. Someone told me that one of my students, they were like, have you ever tried using lot size 50? Because since your strategy is 100%, try using lot size 50. The time I started using lot size 50, it was something different. By that time, we were trading Crash 500. Then now, imagine how much you're going to be making. You have 1,000 US dollars. Then in a day, you start using lot size 50 for scalping. I'm not saying you should be greedy in the market. Lot size 50 is too big. When you're trading Boom 1000. For Crash, it's safer. because the losses you can make if you're caught by a spike is somewhere 600 to 900 max. So for me, that time, my target was only set to 250 max. I was doing 250 each entry. I was just doing 250, 250. So in a day, you end up making it. You'll be able to break even. You make double the amount. You see, the bigger the load size, the faster you make it the profits. You see. So let's say you have 1,500, and then you jump in with load size 50. It's risky if you're caught by a spike, but if you if you're able to understand the risk and do the right thing according to what the system is giving you, you're very safe to be making 250 or $200, 250, $200. So which means you're able to double the account in a day. You're able to double the account in a day. You see? But for most people, they'll call that gambling. They call it gambling because they're not really trading. You're just trying to make money faster, following the scalps. So yeah, if you're willing to gamble that money, that amount, it's up to you to do that. You see, it's up to you to do that. So that's something which I wanted to tell you. Then now you see, the market has now come back to that point. You see, the same thing I was telling you guys. You see, so it has come back to that point. This is the reason why I put a red point here to show you that okay, the market is going to cover up. So if you jumped in into the market at that point, you still recover if you get caught up by that spike. You still recover your money. You see, it's that straightforward. I think there are some things I've missed out. I think there are some things I haven't covered up. Maybe I believe there's some things. But anyways, that's the thing I had for you today because we only have 1 minute remaining. So this video, I'm going to post it on YouTube. Oh, yeah, I remember now. I remember there is this also, which is down here. Forgot. If you read here, it says sell under level 70. Level 70 is sell below. So how to use now? How to use